Hello everyone, welcome to another video from C-Brockett Financial Services. In today's video, we're going over a very important topic, but before we jump into that, make sure you subscribe to C-Brockett Finance on YouTube, Facebook, and Instagram. You're looking for financial information regarding stocks, credit, insurance, financial planning, or even business entrepreneurship. Make sure you follow us on both Instagram and Facebook at C-Brockett Financial Services. So let's jump into it. The reason why today's topic is very important is because I see this happens to a lot of individuals. It happened to myself a couple years ago when I graduated college. And today's topic is how car loan interest works. So, very important. A lot of individuals end up getting themselves into situations where they pay too much for a car. But before we jump to that, I just want to tell individuals that if you're looking to purchase a car, make sure that you go to the credit union or the bank first before your pre-approval, before you go to the dealership. And the reason why I'm saying this is because when you go to the dealership will run your credit through like 10 different systems, 10 different individuals that can approve you for a loan. You don't want all them inquiries on your report. Go to your credit union, go to the bank, get the pre-approval. They'll send the pre-approval to the dealership that you're getting the car from. They'll handle it from there. And the APR that you get on your car loans from the bank or the credit union that you go to is 10 times better than the individuals who are partnered with the dealerships. In fact, the dealerships make money off the car loans that they get you all approved for and get you all signed up for. So never do that situation. Never put yourself in that. It's going to kill you in the end, I promise you. So this scenario that I have up here and these numbers that I have up here are for individuals that don't have credit, individuals that just graduated college and want to go purchase their first car, individuals who just got out of high school and they want to purchase their first car. It's very critical, and I've seen this happen to a lot of individuals. So let's just jump right into it. Let's say John, he's age 23, just graduated college. Congrats, John. John want to go get a car. He gets approved. He goes to the dealership, get approved for a $25,000 car loan, and say, yeah, John is happy at that point, right? But let's say they give him a 20% interest rate on his car. He's not worried about that. He's so happy he finally got approved for the car. Or he's in a situation that he needs a car right now that he puts himself in. For a lot of individuals, wait, don't put yourself in this predicament. If the APR is high, don't do it. I'm just telling you, you're going to lose a lot of money. I'm going to show you how much money you're going to lose in the end. So let's say John gets approved for a $25,000 car loan, interest rate 20%, 5-year period, right? Now, these numbers are very important because these numbers are going to break down your monthly payment, the total interest that you're paying, and the total repaid for that loan that you had got. So let's say, for example, you want to find out what's the yearly interest rate that you're paying on this car. Simple. 25,000 times 0.2. Get those numbers right there. That'll equal yearly you'll be paying $5,000 of interest for that car. Now you break this down. Hand out my phone right quick. 5,000. Let's do this. 5,000 divided by 12. That means per month, the interest that you're paying on that car is $416. Ridiculous, right? 400 interest per month. So that interest or what's going on, that means just because you gave me a $25,000 loan, I took the loan to get a car, that means every month of interest I'm paying you back $416. Keep in mind that this interest isn't the principal. That's just because you gave me the money. That dealership where you got your loan approved for, quote unquote, got you approved and you took that deal. Bad deal, I'm going to show you all. So now, let's say, for example, we want to get into the situation of we want to know these numbers because these numbers are very important. I already put a 5-year duration here, which is the time period of the loan. So basically saying that you're going to pay the car off in 5 years. Advice, anyone purchasing the car, try to get this, pay your car off in 2 to 3 years because the longer that you pay up on the car, the more expensive that it gets over time. And always remember that cars depreciate. They don't appreciate. Homes appreciate, cars depreciate. As soon as you walk off the lot with that car, the value goes down. A lot of individuals get themselves into a situation of they get the car for about 2 years, a bad APR on it. They want to take the car back because it has it has mechanical issues. And when they start to get into that situation mentally, a lot of individuals get tired of putting more money into a car. The car value at the time of like 3 years from this situation here is probably like $5,000. They probably still owe over $30,000 on the car. Even though that loan amount isn't $30,000, I'm going to show you why that they owe so much up on the car. So it's this app that a lot of individuals should download. This app is called Loan Calculate Professional, and it's going to help me input and find out the numbers of what's going on right here: the monthly payment, the total interest, and the total repaid. So, for example, I'm going to put this into the calculator. As you can see, loan calculator. Make sure you download this right here. Has the information. It's going to ask me the loan amount, $25,000. I already have that keyed in, right? Then it's going to ask me the annual interest, same as the interest that you put on the car, APR, for example, 20%. I have 20% here. And now I'm going to put a duration at 5 years, right? Type this in. Let's put 5 years, which is equivalent to 60 months, right? Pay off the car. So this is the information that it gave me back. I'm going to write this down for y'all. Remember, my total interest per month that I was paying on that car because of that loan is $416, right? My monthly payment on this car with that amount is $662.35. Write that down. $662.35, which is roughly a $250 difference between that. So only roughly 200. That's quote unquote. I'm not doing the math to the T. $250 is roughly going towards the principal amount of what I own that car. The other amount is going towards the interest that I have gotten because of my interest. APR in that car, that loan I took out, was 20%. Now you're going to see how we're getting whooped off, right? So the total interest that I paid over the 5-year term of that car is $14,740.83. Total interest, write that down. $14,740.83. That means that just because you gave me a $25,000 loan, I'm paying you back extra, roughly almost $15K. Very bad, very bad. Remember once again that a car depreciates, it doesn't appreciate. So that car value is dropping so fast over time of the duration of 5 years, right? Dropping so fast, but I owe so much up on this car. Now, the total repay is going to be $39,740.83. That's how much I'm going to have to pay back for this loan that I took out for the car of $25,000. Let me see this. 39,740.83. Right? So as you can see, at this point, an individual gets beat out of so much money because they want to go get a car loan, dealership, credit bad, not so much credit history. They want to get a car that's out of their price range, and now they're making so much of a payment, $662 on this car, but I'm paying, out of that, $416 is going towards the interest of the loan instead of the principal. So what's actually good about this app, the app that I told you all about, is that you can go to the schedule, and the schedule will show you the principal, the amount that's going towards the principal, the amount that's going towards the interest, and over time, as you make more payments upon your car, guess what goes down? The amount goes down. So as the amount goes down of that total loan, what's also going to go down is the amount that's paid towards your interest because the loan is going down. So right here, it'll break that information down for you all. As you can see, it has the date, the principal, the interest, the balance upon the car. Make sure y'all use this app, man. It's going to be very, very important. Even when you're purchasing a home, you want to understand the financial situation you're getting yourself into, so you do your financial planning. That is very, very important. So, as we can see, for an individual that went to go get this car, they are definitely getting beat out of a lot of money. But what also happens is that they can change this duration of the time period they're paying the car back. But let's say, for example, if John says, hey, can I make my payments cheaper? Yeah, you can make your payments cheaper, John. So what the dealership is going to do, they're going to give you a 6-year duration, right? So let's say, for example, they give me a 6-year duration. What's going to happen now? You all know. Now I have a more time period to pay the loan back. My payment per month will drop. I'll give you all the final numbers. My payment per month will drop, so I'm going to go back in that app, change the years to 6, go to calculate, And at this moment, you will see not so big of a change, but you'll see a change in this, right? So at this point, what then happens, my payments change from 662. We got my payments to 598. And I advise nobody to do this. If your car payments are over 400 or even over 350, don't get into it, especially if you're a young individual. Financial literacy is very, very important, and it'll kill a lot of people in the end. All right, so my payments dropped to $598.82. I advise anyone, whatever your car payment is, round it up, put the extra dollars into it so you can make sure you pay it off faster over time. The next thing that happens is my total interest jumps from what, 15,000 roughly what it was, to guess what it is now, $18,115.09. It rose a lot, even though my payment went down, because guess what, I added an extra year, payment drops, but my interest rises drastically. Don't put yourself in this predicament. The total amount repaid on that car, that situation, at that time is $43,115.09. So I took out a loan for what? $25,000, end up paying $43,000 back. So this is, once again, man, this situation or this topic here is very, very important. Don't put yourself in this predicament, because once you take out a car loan, it's a financial obligation. You're locked into it. These report to the credit bureaus, and as you get older, credit becomes more important. You want to buy a house or even get access to a credit cards or whatnot. The more that they see a late payment, the more that they see a charge-off account that you're not paying that loan anymore, and it's still reporting on your credit that, hey, you owe them, it's going to kill you, and it's going to put you in a lot of situations where you will not be able to get approved for certain stuff. So just make sure y'all remember this. Anytime you go to a dealership, always look at the APR. Once again, don't never go to the dealership and get approved for your car loan. Go to your credit union or your bank. Easier way. This person right here could have easily went to a credit union and bank and probably got that 20% to 12% at that point. But you always want to go to the credit union's bank. Much, much easier. I'm going to tell you, for example, for myself, I went to a credit union, got approved for 9%. I went to the dealership, got approved for 9% APR. Went to my credit union, 2.5. Saves a lot of money over time. So don't put yourself in that predicament. And just make sure that you know your financial literacy, man. This is very, very important. Make sure you like, share, subscribe, show another individual this video so they can save money and not put themselves into a situation where it's going to hurt them. Remember, C-Brockett Finance, Instagram, Facebook, Brockett Financial Services. Leave your comments in the post. I'll get back to them next week.